Welcome back to the show. James Rule XRP. Be sure to follow me on X at Rule XRP. We're going to go over a couple of things today. If you get a chance, check out my previous video where we talked about Orchestra Finance, Crossmark, how they're building an XRPL AMM DEX so that you could delegate, so that you can get into pools, you can make some passive income. Well, today we're going to take it a step further. We're going to look at a company that's building on top of the Flare network. They are Kinetic Market at Kinetic_Markets. Kinetic Market, built on the Flare network, operates as an algorithmic non-custodial lending platform. Check it out. They posted this on December 14th. Hey, Flare community, we're Kinetic, a lending borrowing platform soon to release on the Flare network. Our Flare network's partnership announced in the wake of the F-Assets beta was no coincidence. They'll be integrated directly into Kinetic. The future's looking bright. What did Flare have to say about this? We're teaming up with Kinetic by Rome Blockchain Labs for easy lending and borrowing on Flare. Liquidity providers get incentivized yield. Kind of like if you're delegating to the time series oracles today, you're getting free Flare, you're getting free Songbird, you're getting the Flare drops. Borrowers enjoy over-collateralized access and tier-based rebates. Check this out. F-Assets aren't here yet, but F-Assets integration allow Bitcoin, XRP, and Doge into decentralized finance. Let's go ahead and get after it. This is the Medium article. This is Kinetic's Litepaper. Kinetic, liquidity in motion. Bear with me. There's a lot to cover here, but there's a lot of excitement because I love passive income. I love delegating. I love making things on top of my principal, and this is going to be an amazing ecosystem once they go live. Okay, here we go. Who is Kinetic? Kinetic is an innovative platform designed to deliver a cutting-edge lending and borrowing solution on the Flare network. Governed by a dedicated team of 3 core contributors, Kinetic strategically partners with Rome Blockchain Labs, leveraging their technical infrastructure for seamless 24/7 communication, security, and reliability. This collaboration capitalizes on the team's extensive knowledge from years of experience in the decentralized lending space. Beyond its primary partnership, Kinetic aligns with various protocols and includes partners which include Flare Labs, F-Assets, FTSO, which are Flare Time Series oracles, Stake Connectors and Layer Cake, LedgerWorks, WatchPug, Enosis, and others, ensuring a secure and user-focused decentralized application, or DApp for short. What? Kinetic operates as an over-collateralized algorithmic lending and borrow platform, facilitating a peer-to-peer lending experience where users deposit assets into a supply pool. These assets serve as collateral for users seeking to take out loans, with interest rates dynamically determined by the supply and demand of each asset at any given block. Each asset will also have its own set of parameters, such as collateral factor, reserve factor, and borrow cap. As long as the user's loan remains in good standing, there is no predetermined time in which the user must pay back a loan. Kinetic offers a competitive staking program, Key Stake, where the fee mechanism rewards users who have delegated and staked their tokens. Why? Built on the Flare network, Kinetic aims to align with users' interest in the advanced strategies and reliable decentralized data made possible by FTSO, Layer Cake, and F-Assets. The missing piece was to develop a protocol that would enable both individual users and institutions to take advantage of these technologies while creating a liquidity hub on Flare from which DeFi expansion can flourish. How? Lending on Kinetic operates through smart contracts built on the Flare blockchain. The platform allows users to lend and borrow digital assets in a secure, permissionless environment. The following is a simplified explanation of how lending works on Kinetic. Deposit assets. Users start by depositing their digital assets into Kinetic's liquidity markets. These markets are a collection of funds that users lend out to others. And in return, lenders receive interest payments based on the assets they have supplied. This is so exciting, people. Listen up. The assets deposited can vary, beginning with the tokens such as Wrapped Flare, EUSDT, and ETH, with new and expanded markets coming. Earn interest. Once users deposit their assets into a liquidity market, they begin to earn interest paid by those borrowing the asset. The interest rate is determined by the supply and demand dynamics within the market. If there's a high demanding for borrowing a specific asset, the interest rate paid for borrowing that asset will increase. Inversely, if demand is low, the interest will lower. This mechanism ensures that return rates are continuously adjusted according to market conditions, which is smart. Receive K tokens. Upon depositing assets, lenders receive K tokens representing their share of the market and the interest on their deposit. These K tokens are representative tokens which can be redeemed for the original assets plus earned interest at any time. The K tokens can also be transferred, offering additional flexibility to lenders. Security and over-collateralization. Pardon me there, and bear with me. There's a lot to cover here. Kinetic requires borrowers to over-collateralize their loans to ensure the safety of funds lent out. This means borrowers must deposit assets worth more than the amount they wish to borrow. This over-collateralization is a security measure to protect lenders against the volatility and rapid price fluctuations common in the cryptocurrency market. These markets are also protected by parameters such as the jump rate model, borrow caps, and reserve factors. The jump rate model is an interest rate model that increases borrowing costs sharply once the utilization rate, ratio of borrowed to available funds, exceeds a certain level, discouraging excessive borrowing and ensuring liquidity. Borrow cap, the maximum amount that can be borrowed from the protocol, either overall or per asset, to limit exposure and mitigate the risk of defaults or market manipulation. Reserve factor, a portion of the interest paid by borrowers set aside in a reserve fund, not paid out to lenders to cover potential losses and ensure the protocol stability. Liquidation mechanism. If the value of the collateral falls below a certain threshold due to price fluctuations in the market, the protocol may automatically liquidate or sell off the borrower's collateral to ensure lenders are paid. This mechanism helps mitigate the risk of loss for lenders. Win. Kinetic believes in offering a fair chance for all users to participate and engage in the early stages of the Kinetic platform, and therefore will not be hosting a token sale. In Q2 of 2024, Kinetic will launch the Jewel token on a centralized exchange. Kinetic will launch Genesis pools for Enosis wrapped assets, EUSDT, and ETH in Q2 2024, offering substantial incentives to reward early adopters, fueling the growth of an interconnected DeFi ecosystem. Alongside the release of the Genesis pools, Kinetic will be hosting the testnet version of our protocol on Costin 2, allowing users to view and test the protocol ahead of a full launch on mainnet. And I cannot wait to be one of those testers. I love it. I love it. I love it. Kinetic will then launch with plans to introduce markets for traditional assets such as ETH, Wrapped Flare. How about EUSDT? Following the deployment of Flare's F assets, additional markets will be added for the tokens like F Bitcoin, F Doge, and FXRP, followed by Layer Cake's available bridge assets. As the access to markets on Flare undergoes continual expansion and development, Kinetic will grow and evolve in tandem. Here's the tokenomics. Jewel has a maximum supply of 1.5 billion tokens. Token distribution. I'm not going to read this all in detail, but you got protocol development, liquidity incentives, token launch and exchange liquidity, ecosystem growth. Jewel versus Key. Jewel is a native liquid token on the Kinetic protocol available on Probit and future centralized exchanges and decentralized exchanges. Jewel can be staked for Key tokens, the transferable incentivized version of the Jewel token, which enables users to collect rebates on paid interest and participate in voting and future governance. Converting Key back to Jewel requires a 90-day cooldown period, or it can be converted instantly at a 35% early conversion penalty. Burning those most tokens from the total supply. This mechanism incentivizes long-term holding and stabilizes the value of the token. During the 90-day cooldown period, Key earns no rewards. No token sale. Kinetic has been designed in a way that holding the staked version of the token enables users to shape the future of the protocol. For this reason, Kinetic will not be hosting a token sale, focusing instead on natural growth and genuine engagement across diverse ecosystems. This decision reflects Kinetic's dedication to sustainable development and our belief in the transformative potential of our platform. A pivotal moment for Kinetic and the communities will be the token launch on Probit, offering a fair chance of participation for all. Here we got Key Stake. We got delegations for Key. Like I said, I'm going to leave a copy of this below. You get your Key staking tiers. I mean, there's so much governance, reward-based voting system, regular voting cycles. There's so much to cover here. Community feedback and transparency, core team role and decision-making authority. Flare drops. Check this out. A unique aspect of the Flare ecosystem is the inclusion of flare drops for wrapped flare holders. Kinetic is working with multiple partners towards solutions where users can maintain their eligibility to collect these rewards. These solutions are set to roll out before the full protocol launch to ensure accessibility and inclusion of the Flare native assets. So you're talking about delegating, getting flare drops, loaning your tokens out. I mean, this is incredible. Key partnerships, Flare Labs, LedgerWorks, Into the Block, WatchPub, and Rome Blockchain Labs. Launching in Q2 of 2024, Kinetic has developed a practical lending application that leverages Flare's technological advancement. Kinetic aims to bridge gaps, attract momentum from various assets and ecosystems, and enhance the DeFi landscape on the Flare network. By utilizing F assets, implementing the Flare time series Oracle, focusing on progressive governance, and prioritizing user experience and security, Kinetic is working to catalyze DeFi on Flare through lending. Amazing. Amazing, amazing, amazing. Kinetic. Let's check out Kinetic's webpage. I'm going to hit refresh. I love this webpage. Check it out. Kinetic, liquidity in motion, supply, stake, borrow, and work. And we're briefly going to go through it. I know I've covered quite a bit here, but I'm really excited about this. There's so many opportunities. You know, supply, the initial step in making your asset work for you. Stake, converting Jewel tokens into Key enables you to earn rebates on your loan positions. Borrow, borrowing on Kinetic allows you to leverage your supplied assets into various financial strategies and unlock a wide range of DeFi possibilities through the Flare ecosystem. And work, along with putting your assets to work, Kinetic allows you to take action. Voting helps shape the future of the protocol, and users are rewarded for their participation. I'm not going to go through this in detail. I love the webpage. Here's the partnerships. Kinetic, liquidity in motion. Be sure to follow them on X at Kinetic_markets. I'm going to be getting with these guys Wednesday on a Zoom chat. We're going to go over some things. We're going to get excited, and I'm just getting it out there to the public. My name is James Rural XRP, the James Rural Crypto Show. Have a wonderful day, and we'll see you soon. And I'm out of here because I told you so.